is with regards to strategy. And I understand that we'll probably talk about results furthermore, but obviously over the last couple of years, there's been a major reduction in poultry. Is that an area that Rural Funds is looking to diversify back into, or is the yield just not worth your time?
It's a very astute observation. So I've just gone back to this earlier slide. You can see when the fund was first listed. So if you cast your eye to the left-hand side of the bar chart, FY14, we generated almost 50% of our revenue from the poultry sector. And then that reduced in relative terms over time. So what happens is we invested in other sectors within the portfolio and grew out those. But of course, after FY20, that sector revenue generation has stopped altogether. And that's because we sold those farms. Those farms were approaching the end of their useful life. And when we looked at the CapEx that was required to redevelop a portion of that poultry infrastructure, and then we looked at the suite of other opportunities that we had to deploy our capital into, we felt that it was better capital allocation for us at that point in time to invest in other sectors.
Okay. And so at the moment, if you did have more capital, where would you want to be investing in? What would be the option?
Thank you. And I'll take that.
It takes us back to our outlook, doesn't it?
It's probably not immediately evident from this slide, but this is a really exciting sector for us, and that's cotton. Rural Funds Management has put down a cotton crop almost every year for its 27 plus years of operations. So it's a sector we know extremely well. And what we're seeing is additional advancements in plant breeding as well as growing techniques. I've been with RFM for around 17 years. And when I first started, we would have been thinking of cotton yields of sub 10 bales per hectare. And then through plant breeding and so forth, the expectation around cotton crops went to, say, 12 bales per hectare. And now what we're seeing is some of the producers in this part of the world, by virtue of being able to exploit the additional season length, which comes from a Queensland summer particularly, being able to exploit that additional season length means that some of the operators in this area have been able to grow yields in excess of 20 bales per hectare on some of the blocks within their properties. So yield is really a key driver of returns in agriculture, and probably one of the more controllable components. If you think about, well, what is the fundamental return from farming? It's yield times price minus expenses. There's not a lot you can do about the price, but if you can generate additional yield, that's really attractive to agricultural operators. Where that benefits the Rural Funds Group, of course, is that we have the ability, as shown on this screen, to develop farms for lessees that really have the potential for generating higher yields through irrigated cropping techniques supported by very high quality irrigation infrastructure that is recently developed by RFM. So it's not to say that the other sectors are disappointing, but what's really standing out for us at the moment, and if we had access to incremental capital, we would certainly be looking closely at more investment in the cotton sector in Northern Australia and more specifically probably Queensland.
Lovely.